Bitcoin still correlates a lot with the stock market, software indices, tech stocks, etc. So we're really early, and it's kind of weird that you keep hearing this. Like for us, we've been around for so long, and we've been saying this, and other people are saying this. We're early, but we really are early because Bitcoin is trading at 70,000 something, 80,000, even anything under 120,000, 110,000. I think is below fair market value, and that can be determined in a number of ways. Just keeping track with inflation, like Bitcoin needs to be at 111,000, I think, to keep track with inflation over the past.
One recurring concern in the Bitcoin space is the growing concentration of Bitcoin in the hands of large players, particularly Michael Saylor and his company. Mow addresses this directly by framing it as a natural outcome of a free market. His argument is straightforward. Bitcoin is permissionless. Anyone had the opportunity to accumulate it earlier at lower prices. Saylor's position is not the result of manipulation, but conviction and execution over time. The majority of his holdings were acquired when Bitcoin was significantly cheaper, and he has consistently added to his position regardless of market sentiment, volatility, or negative media coverage. From this perspective, complaining about concentration is equivalent to misunderstanding how open markets work. Redistribution would require interventionist or collectivist policies, which are fundamentally incompatible with Bitcoin's design. At a deeper level, Mow suggests that Saylor's accumulation signals something more important: how few people truly understand Bitcoin. If understanding were widespread, accumulation at that scale would have been much harder.
I mean, there's always been this concern from people that Saylor has too much Bitcoin, and I'm not really sure there's much you can do about it because it is a free market at the end of the day. So if you think he has too much Bitcoin, you should just buy more Bitcoin. It's kind of like complaining that someone has too much money. Well, they had the foresight to go into it early on. Like if you look at the structure of his holdings, the bulk of it is from earlier on, not at recent times. I think he added 100,000 last year, and he's probably on track to add more than that this year. But the majority of his holdings were from earlier on. Bitcoin was lower and higher, but he's just had conviction to keep stacking regardless of the market, regardless of the FUD, regardless of the Wall Street Journal article saying this guy lost billions of dollars. It's just he has the conviction and he has the execution ability to do this. So I don't think you can really complain that he has too much Bitcoin. And of course, it's better if Bitcoin is more equally distributed amongst people, but that doesn't really work unless you want to go full collectivism and divide it up, and that does not really function. Well, I honestly didn't think he would cross 500,000 Bitcoin, but he did. So I think it just goes to show how early we are and how few people in the world really understand Bitcoin. People are still allocating maybe 1% of their portfolios to Bitcoin. They're kind of dipping their toes in the water. Bitcoin still correlates a lot with the stock market, software indices, tech stocks, etc. So we're really early, and it's kind of weird that you keep hearing this. Like for us, we've been around for so long, and we've been saying this, and other people are saying this. We're early, but we really are early because Bitcoin is trading at 70,000 something, 80,000, even anything under 120,000, 110,000, I think, is below fair market value, and that can be determined in a number of ways. Just keeping track with inflation, like Bitcoin needs to be at 111,000, I think, to keep track with inflation over the past 4 to 5 years. And then fair market value from stock to flow models are indicating its fair market value something like 110, 115,000. So this is a deep discount right now, and it's because people don't really understand Bitcoin. We saw Bitcoin drop when there was conflict heating up in the Middle East with Iran, and that's just not something a rational actor would do in the face of war, because war is when you need neutral money. You don't want to keep UST bills or currencies held in central banks of various countries around the world. You want something that has no counterparty risk, which means nobody can seize it, prevent you from spending it, or dictate what you can or cannot do with your money. So we are very, very early still. And I think the market will realize this when it's too late. Well, I think maybe we're running in different circles. All the whales and old timers I know are still all in, but I'm curious who you know that's selling, because I don't really know anybody that is losing conviction in Bitcoin. But I think what you're talking about illustrates a broader picture, which we've kind of realized over time, that a lot of people that are in Bitcoin don't really necessarily understand Bitcoin, right? You can go back to examples like Roger Ver. Did he really understand Bitcoin because he sold it for Bcash? Um, there's a number of these people that were lucky, got in, and they didn't really get it. I mean, I don't want to name names, like there's a lot of people that don't really get it. There are other people pushing Zcash and saying it's better than Bitcoin, and I think they may be pulling a Roger Ver, selling some Bitcoin to buy Zcash, and I don't think that's a smart decision. But everyone can do whatever they like to do with their money. But I think a lot of people that understand Bitcoin know that there is nowhere else to go. You can think it's not going to go up, but still, like, why would you want to sell it for an asset that's treading water? It's depreciating at 11%, like Michael Saylor's thesis that fiat money is an ice cube that's going to melt, and you're losing 11% a year, and that's generous. I think it's real inflation is probably like more 20% around that line, and money is always being printed. Debt is always going up. The US is getting close to $40 trillion in debt now. It's just the compounding is devastating. So why do you want to hold this unless you're very high time preference and you just, I don't know, want to buy a boat and spend a lot of money? But that's a lifestyle choice. And I think even if you put Bitcoin aside, a lot of people in the traditional world of having money, they realize that that's not really freedom. You're just changing your chains to something else. Now you have to maintain your boat, your jet, and you have to keep up appearances and spend to just on upkeep. And I think the simpler way to live life is just to have a simple life where you don't have to worry so much about your day-to-day cost of living and your unexpected things that you might need to buy or spend money on, or like health or whatever. But that's real freedom. I think that's kind of the Bitcoiner perspective. So I think the real Bitcoiners that understand money, understand Bitcoin, are really not going anywhere. It's just the tourists, they're leaving. And some of the tourists might be whales, but I don't know any personally because I don't know. Maybe I pick my friends more carefully. Yeah, I've seen that. I forgot who wrote that, but it was like, this is the IPO moment. But every time the price is down, someone somewhere is going to try to rationalize it, right? Like, it's because of this specific reason. And I don't necessarily think that's the case. Sometimes the market just can be irrational. People are overexposed for various reasons, or they're trying to use Bitcoin as a hedge because they're worried about macroeconomic factors like war, which doesn't make sense because they don't understand Bitcoin is not a tech stock, but they're dumping stuff ahead of time because Bitcoin is a more liquid market and it's 24/7 and global. So it's just used as a dumping ground. But I see that it's coming to a close because traditional markets are becoming 24/7, and they're even trying to tokenize and launch on various blockchains too. So there won't be a real need to dump Bitcoin ahead of bad news to hedge anymore. And you couple that with the massive amount of buying demand from Strategy, from STRC, and other companies, that's not really a bearish thing that the tourists leave and the people with a plan and long-term outlook are coming in. Well, definitely, Bitcoin price is affected by macro. It's like we are integrated into the financial system now through all these different instruments, ETFs, like TradFi, futures markets, everything like that. So there's no separating Bitcoin. We've definitely grown up and we've grown into a place in the financial system, which I think is only going to get bigger and bigger as people understand Bitcoin. But if you look at the war playing out, is definitely very interesting on a number of fronts. So you've seen that Iran is they've been rumored to be taking Bitcoin for payment along with stable coins and Chinese yuan, but I don't think we've seen any confirmation yet. Like, no address has been publicized that this is a Bitcoin address that's going to Iran. But the interesting thing there, less so for Bitcoin, more so for stable coins, is that Iran is seemingly accepting payment in stable coins. And this is at a very unique time in the history of the Federal Reserve, which is they're seeing a decrease in demand for treasuries and the US dollar in general as the world becomes multipolar and nations are going off the dollar or being forced off the dollar, like in the case of Russia. But to make up for that shortfall, they've kind of embraced stablecoins. So they passed the Genius Act. They're pushing stablecoins heavily. A number of countries are, but the thing is, they need that to offset that drop in demand. But stablecoins, for the most part, are somewhat permissionless. Yes, they can be frozen, but for a certain amount of time, they can move freely. And if Iran is accepting stablecoins for payments, then it's sort of like the meme where that guy is like got two red buttons and he's got to choose. Like, do I want the dollar to live or do I want to control the dollar? Because if you start to block that rail, then definitely Iran will move to a neutral money like Bitcoin. And I think this is an interesting precipice to be standing on to watch what the world chooses to do. I really can't figure out either way which one they're going to go with, so I'm watching along with everyone else. But it's definitely very entertaining to watch this dilemma unfold in real time.
A central claim in Mow's thesis is that Bitcoin is currently trading below its fair value. He points to multiple frameworks for this. Inflation-adjusted valuation suggests Bitcoin should already be above six figures. Models like stock-to-flow indicate a similar range for fair value. Current market pricing reflects misunderstanding, not fundamentals. In his view, anything below roughly $110,000 to $120,000 represents a discount. What explains this disconnect? Mow argues it comes down to incomplete understanding. Many investors still treat Bitcoin like a tech stock, reacting to macro events in ways that don't align with its core properties. For example, during geopolitical tensions, Bitcoin has sometimes sold off alongside risk assets. Mow considers this irrational. In theory, periods of conflict should increase demand for neutral, censorship-resistant money. The fact that markets react otherwise highlights how early the adoption curve.
Unfolding of events shows that there is no such thing as a 4-year cycle, because we hit an all-time high before the halving and then we reached a new all-time high, but not a very euphoric all-time high post-halving. And people seem to think that that is the top and we're going to be down for the next couple of years. But I just don't think that's the case. Everything is up in the air now, and I think an omega candle and $1 million Bitcoin is just around the corner, especially with all the buy pressure that is flooding the market now with Saylor through STRC and other Bitcoin treasury company players all coming in. I don't think there is enough supply for them. And I believe the market's kind of misleading people to think that there is an infinite supply of Bitcoin and price will always be low. But Bitcoin has a habit of doing what you don't expect it to do. And I think if you realize that there is such a constrained amount of supply that it is absolutely finite, then we'll see a supply shock. But I mean, he is kind of setting the floor for everything. So his average cost is $75,577 per BTC. And with this recent downturn in the market, he's been able to average down, which is really insane when you think about it. The biggest single holder entity of Bitcoin is able to average down. And I think even other treasury companies like Metaplan are averaging down. So you kind of have to think that this is an anomaly. These are buyers of last resort. They will always buy Bitcoin. They're price insensitive. They will always buy, even if it's 500,000 a coin or 700,000 a coin. But people right now are willing to sell them Bitcoin for $60,000, $70,000, which lets them average down. And I just don't think it's sustainable. And you couple that with like BSTR from Adam Back, they are probably going to de-SPAC in the next month or so. And they have $1.5 billion of capital to deploy. And then they're going to be running similar strategies as Strategy to accumulate. So if you look at the landscape, there is just not a lot of room to wiggle. If you think back to, let's say 6 months ago, it doesn't seem to happen now, but every time Saylor would announce a buy, we will see a dip, right? And recent days, I think it's because of sustained buy pressure from STRC sales, but we don't see that dip anymore. He announces we bought, and we're still steady at the 74,000 something mark. But if you think about it, even if there is the Saylor dip after he announces and we go down a bit, then maybe BSTR will buy that day too, and then the next day it's Metaplanet, and there's only so many days in the week, and there will be more Bitcoin treasury companies popping up too. So I just think the supply shock is really inevitable, and the amount of Bitcoin available is actually lower than most people think. People think there's 2-3 million coins on exchanges ready for sale, but those are not coins that are meant for sale. That is liquidity. That's market makers and trading firms and hedge funds using that Bitcoin on exchange to perform other activities, and it is not meant to be just sold and never bought back. Well, it's not just him. There's also the ETF. So on Jan 3 Financial, we have a tracker showing the supply-demand imbalance, and even the ETFs are a net buyer over time. So you can see they're already buying a multiple of the mine supply on average. And then you factor in strategy, that's just not a lot of Bitcoin left. But he's able to do that right now primarily through preferreds, and he's done a large strategy shift to this instead of convertible notes and other instruments. So it's just purely funded through MSTR and STRC. And STRC is kind of a brilliant product because it's stripping away volatility from Bitcoin and sharing upside, which is 11.5% right now. And most people are happily going to take that 11.5% over buying Bitcoin and risking, being down 20% sometimes. But those sales above par, above $100 of STRC, that is what's funneling capital into strategy to buy Bitcoin at these prices. Well, I still think it's an omega candle in the forge right now being crafted, but there's no limit to how many companies can issue these types of products. I think strategy has a big advantage over being so large, but you can see Metaplanet already started. I think their preferred shares are not yet listed publicly, but that's something they're working towards. And I would assume that BSTR will do something similar too under Adam's leadership, because it is a brilliant product. Let me think. And then there's also Strive with SATA. Sometimes I leave that one out and people ping me on X and say, hey, you forgot SATA from Strive. But yeah, they're doing it too. And their yield's even higher because they're smaller. So they need to make up for that difference. But it's a very similar product and similar results. So what we're seeing now with this massive spike in demand in STRC is that there are institutional players that are willing to arb and just buy for collecting the dividend. So normally what happens there is people come in, they're trying to arb, collect the dividends, and then they exit. But for some reason, STRC is still holding at par. So either the big players are just parked there, or there's still more demand than people selling to get out of that, dividend harvesting mechanism over the long run. So STRC has been holding very, very steady for the last while, and I think it's a trend that we should expect.
Mow reinforces a familiar but important argument. Fiat currencies are structurally designed to lose value over time. He aligns with the idea that inflation, whether officially reported or nodes purchasing power significantly. Estimates of real inflation, in his view, may be far higher than commonly stated figures. Against this backdrop, Bitcoin offers fixed supply, no counterparty risk, resistance to censorship or seizure. The implication is not just that Bitcoin may appreciate, but that fiat guarantees depreciation. Holding fiat long-term becomes a losing strategy unless one has immediate consumption needs.